Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. You sent us a stack of sources this week that is truly global in scope.
It really is.
We're covering everything from, the dull but critical U.S. inflation report all the way to institutional tokenization and even geopolitical crypto security threats.
It's a mosaic of information that, at first glance, doesn't seem to fit together at all.
Exactly. So our mission today is to connect these dots. We've got the CPI data, these billion-dollar hacks, new regulatory frameworks.
Right. We need to filter out the noise and find the real signals driving the digital asset space as we head into 2026. Because it's a dense and, I'd say, critical confluence of material.
It feels like it.
We have macro uncertainty colliding directly with these, massive institutional buying signals.
And we absolutely have to start there. With the most fascinating contradiction in this entire stack, the broader crypto market isn't exactly soaring right now.
No, not at all.
Bitcoin prices have fallen. The total market cap is sort of struggling around that $3 trillion mark. But then yesterday, one metric just exploded. So let's just unpack this right away. In a single 24-hour period, we saw nearly $500 million, $439.9 million to be exact, in Bitcoin ETF inflows.
And what's fascinating here isn't just the sheer size of that number, but the timing.
Right.
This institutional surge happened right after the release of the key data point that's setting the stage for 2026 volatility. That was the November 2025 CPI report, released on December 18th.
So that's the key.
It is. Understanding how these giants in traditional finance interpreted that one specific inflation number is the key to everything else we're going to talk about.
Okay, so let's jump straight into it. Section 1, the macro crypto paradox. The big news coming from the Bureau of Labor Statistics is that inflation for November 2025 stands at 2.7%.
For all items. And core CPI, which, takes out the volatile stuff like food and energy, is at 2.6%.
And this immediately brings up that paradox we've been seeing with Bitcoin, doesn't it?
It really does, because historically, Bitcoin was pitched as this ultimate safe haven,
Yep.
right? Hedge against runaway inflation.
The digital gold narrative.
Exactly. But lately, we've seen the complete opposite. When inflation picks up aggressively, forcing central banks to tighten up.
Bitcoin's price tends to fall. It acts more like a risk-on growth stock, not gold.
Precisely. But here's where it gets really interesting, because the market is reacting to the easing signal in this report.
Because the prior month CPI was, 2.9%? So this 2.7% figure is actually a drop?
Right. It suggests inflation is decelerating. And for risky assets like Bitcoin, a lower than expected inflation number is actually a powerful boost.
Okay, so break down that mechanism. Why is that?
Well, it's all about the Fed. When inflation slows down, it dramatically reduces the fear of aggressive interest rate hikes from the Federal Reserve.
Got it. So less fear of rate hikes means capital is cheaper.
Exactly. The opportunity cost of holding risk assets, like Bitcoin, goes down. Capital starts looking for higher returns in more volatile markets. So that slightly lower inflation number was the green light the institutions were waiting for.
And that explains the surprising, $439.9 million in ETF inflows?
That's their bet. They're betting on a more accommodative Fed stance in the new year.
So the smart money is looking past the current price chop and is focused entirely on what the Fed might do next. For our listener who wants to, anticipate these moves, what are the key dates to watch in early 2026?
You absolutely need to circle 2 dates in January. First is the next CPI data drop that's scheduled for January 13th, 2026.
Okay.
Then, about 2 weeks later, the Federal Open Market Committee, the FOMC, will announce its latest interest rate decision on January 28.
And that 2-week window between the data and the decision is prime time for volatility.
That's when we'll see it. The market will be digesting the new inflation data and just speculating like crazy on the Fed's response.
Now, zooming out from the ETFs, the sources also show that institutional confidence isn't just about short-term trades. There was another metric that saw a massive surge.
Digital asset treasury inflows.
Right. And this suggests something deeper, a more long-term commitment.
It absolutely does. The jump was fascinating. Digital asset treasury inflows surged to $3.76 billion. That's up from hovering around the $2 billion mark recently.
And that's not just day traders, that's corporate balance sheets.
That's what businesses and high net worth individuals are holding long term. And the money is flowing predominantly into proof of stake, or POS, protocols.
Can you just quickly break down why POS is so attractive for these big balance sheets? It sounds like they're looking for passive income.
That's exactly it. Instead of just buying Bitcoin and hoping the price goes up, with proof of stake, you're essentially buying a yield-generating mechanism.
They can stake their holdings.
Right. They lock up their assets to help secure the network, and in return, they earn new tokens as a reward. It turns a volatile asset into a revenue-generating item on your balance sheet.
Which makes it way more palatable for a corporate treasurer.
Way more. It signals deep, systemic confidence in the underlying infrastructure itself.
Before we move on, let's just do a quick health check on stablecoins, like Tether, USDT. They're also sensitive to these rate expectations.
Yeah, and they're a great indicator of dry powder capital that's ready to be deployed.
So what's the status there?
Well, the sources highlight that Tether's 24-hour trading volume is still below the level analysts think is needed for a really sustained new bull run.
And what's that level?
It's currently sitting around $97 billion. Our analysis suggests that for Bitcoin to truly sustain a new all-time high, we'd need to see that 24-hour Tether volume surge above $160 billion.
We're not there yet.
Not yet. That massive volume is the sign of fresh, aggressive capital flooding into the system. So while easing CPI is good, some caution remains.
That sets the perfect stage for our next section, actually, because institutional confidence isn't just about macro rates. It's about regulatory clarity.
And the technical plumbing.
Exactly.
Yeah.
So let's look at 2 critical moves that show just how much more comfortable TradFi is getting with this tech. First up, a big policy shift from the Federal Reserve Board.
Yeah, this is a huge change. The Fed is officially replacing its restrictive 2023 policy, which basically discouraged banks from touching crypto with a new 2025 policy statement.
Okay, so what's the core philosophy behind this new policy?
The philosophy is brilliant in its simplicity. Same activity, same risk, same regulation.
So it moves away from just blanket restrictions.
Totally. It moves toward a risk-based assessment It's explicitly designed to support financial innovation as long as the banks can prove they're managing the risks properly.
And crucially, it's not a free-for-all. I saw there are really stringent requirements for uninsured banks that want to get involved.
That is the critical safety valve. The new policy gives a clear path for, say, an uninsured state member bank to seek permission for novel activities, but only if they can prove they have impregnable financial controls.
Like what, specifically?
Specifically, they have to maintain capital buffers like 100% high-quality liquid assets, or HQLA.
HQLA, break that down for us. What does that mean in practice?
HQLA just refers to the assets that are so safe and liquid they can be sold for cash immediately. Think short-term U.S. Treasuries. By requiring 100% HQLA, the Fed is making sure that if one of these banks gets into trouble with a crypto activity,
the risk is contained. It doesn't rely on federal deposit insurance to bail it out.
Precisely. It's safety first, innovation second.
And that regulatory green light is being matched by real-world breakthroughs. The second major institutional move in our stack, the DTCC, is officially moving real-world assets onto the blockchain.
This is a seismic event. I mean, when we talk about the DTCC, the Depository Trust and Clearing Corporation, we're talking about the absolute central plumbing for U.S. stocks and bonds.
This is not some startup playing around. This is the system itself.
It is a system. And they are actively working with a digital asset to tokenize the U.S. Treasury securities that are held at the DTCC.
Which is the first time these specific foundational assets will be available on-chain. Where is this happening?
They're running a pilot program on the Canton Network, which is a blockchain built specifically for institutional finance.
Right, with privacy and all that built in.
Exactly. And the pilot is set to launch as early as the first half of 2026. The goals are transformative. Improve liquidity, drastically reduce costs, streamline everything to make trading faster, safer, more efficient.
This just gives blockchain so much credibility at a massive systemic scale.
It really does. It shows the industry's focus has fundamentally shifted from if blockchain technology will be used to how it's going to be implemented safely and at scale. This DTCC move is going to set the standard.
Okay, but we have to address the security paradox here. We can't talk about all this innovation without talking about the immense risks, and the sources point a huge finger at North Korea.
The scale of the theft it's just shocking. It really underscores the high stakes. According to the Chainalysis report, North Korean hackers stole a record $2 billion in crypto last year alone.
$2 billion. And that's a 51% increase from the year before.
It is. It brings their total known crypto haul to something like $6.75 billion.
That's an astonishing amount of money. And their laundering methods are getting so much more sophisticated. How are they moving these stolen billions?
It's a highly decentralized multi-stage process. First, the stolen funds, often from big attacks on centralized platforms like the one on Bybit, are funneled through dark web money launderers.
Often using Chinese brokers, right?
Often, yes. Then the funds are split up and passed through mixers and bridges, tools designed to obscure where the money came from. But the critical part is, to evade automated detection, they break it down into thousands of smaller transactions and spread the movement out over, 45 days.
Wow. So it's a systematic effort exploiting the very nature of the chain.
It's the core tension of the digital age, isn't it? This incredible technology enables both legitimate systemic efficiency and sophisticated criminal enterprise.
It's a jarring dichotomy. Let's pivot to the innovation hotspots. If North Korea represents the risk, the Middle East is rapidly building the digital infrastructure of the future. Let's start with Saudi Arabia's push into AI data centers.
This is massive infrastructure planning. HDC Group subsidiary Center 3 and UMain Group have formed a joint venture to build these incredibly advanced data centers in Saudi Arabia.
And the goal is to support up to 1 gigawatt of high-performance workloads for AI and large language models.
1 gigawatt, that's enough to power a small city.
So they're positioning themselves as a major global player in AI computation.
Absolutely. It's a strategic investment in, digital sovereignty.
Meanwhile, Abu Dhabi is focusing heavily on stablecoins.
Correct. Open Stable Network, or OSN, and the Blockchain Center Abu Dhabi announced a partnership to accelerate digital asset infrastructure in the UAE.
And OSN's role is what exactly?
They're providing a scalable, interoperable stablecoin settlement solution. Their expertise is in foreign exchange infrastructure for global money movement, so they're building the rails to make it easier and faster to use regulated stablecoins for things like international trade.
So it all ties back to their long-term vision of a diversified, innovation-driven economy.
Exactly.
So What does this all mean when we put the pieces together? We've covered a lot of ground. Easing U.S. inflation, massive institutional inflows, regulatory shifts.
It means we're in this dynamic, high-stakes environment where traditional finance is not just watching from the sidelines anymore, they are actively adopting blockchain.
Right.
The easing inflation created this risk-on environment, which drove the inflows into ETFs and corporate treasuries. And at the exact same time, the big gatekeepers, the Fed, the DTCC, are building these clearer, more compliant bridges between TradFi and blockchain.
So we're really seeing traditional finance integrate this technology for its core functions, which over time should make crypto less risky, more compliant, and ultimately, more mainstream.
It's a powerful sign of market maturation, even with all the short-term volatility. And that DTCC move to tokenize U.S. Treasury securities is arguably the most powerful demonstration of that in all of your source material. It's a fundamental paradigm shift.
Which raises a really important question for you, the listener, to think about. Given that the U.S. Treasury market is foundational to all of global finance, and the DTCC is planning to expand this, if this pilot program in the first half of 2026 is a success, what traditional asset class do you think will be the next one that major institutions rush to tokenize?
Something to mull over as you watch those critical January volatility dates approach.